couldn't get around it, but ready to go this week. We'll continue with our training. Before we start, any questions? Anybody? Did everybody get a chance to review the video? I posted it. Questions? Yep. There we go. Yeah, go ahead. Any questions about what you saw? Do you need a review of that? Can we continue? Do you feel? Where are you at? I viewed it like 100 times. Okay, that's good. All right. Anybody else have any questions about it? No? Okay. All right. So let's continue then. Okay. So we're in the area, we're talking about covered calls. Okay. And what we're trying to establish is rules based around how to approach covered calls. Okay. So covered calls are, what are we doing in covered calls? Okay. I'm always going to use individual, 100 share lots. So we buy 100 shares of a stock of ABC and we sell a call against these shares. Okay, so we rent out the control of those shares for a period, say 30 days. Okay, and for doing that, we receive a premium. We receive a premium. Okay, and that's how we do it. Okay, so we buy 100 shares, we sell a call for a period of say 30 days, and we receive a premium. Basically, rent. We talked about this last week. Similarities between that and renting out an apartment, or renting out a house. You rent out your stock for a period, and that's the approach of covered calls. That creates protection, some downside protection of loss because of that premium. Also, we cap our winnings. Obviously, we cannot gain more than the call that we sold, but we guarantee passive income, and that's really the strategy behind this, is passive income. Okay. All right. Any questions about that? Everybody understand that? Does that make sense? No questions? Okay. So let's continue with covered calls and talk about some of the rules we apply. Okay. So okay. Okay, so everybody can see my screen, okay? Okay. All right, I'm going to launch also Interactive Brokers to show you an example. We're just going to use a fake account. I hope everyone set up some sort of account with somebody, just so you can follow. You can try it on your own platform. Okay. So covered calls, right, is an agreement between two people. So promise to sell stock and get paid for that, right? So we're saying to somebody, look, we'll sell you the stock at a certain price for a certain period, and they pay us a premium for that. And that's how we make money on a covered call, okay? In addition to the opportunity to make a little bit more if it goes up, okay? So if we bought 100 shares of AMD at 13.30 and we sold the 14 call, right? The 14 call, okay? The gain would be $60 on short call. Okay, so they paid us $60 for control of these 100 shares. All right, and also we made 70 cents from 13.30 to $14. So in the event that it goes up and they take the stock away from us, we make $130. Okay. If the stock stays exactly where it is, we still make the $60, right? Because of the premium. Right, so we make $60 because they paid us $60 to control the stock at $14. Take it away for $14. Okay, if it goes down, we do have a loss, but the loss is reduced by that $60 because we're always taking in $60. So what would happen is our break-even point, we could afford for this to go how low? We could afford this to go down to $12 and 70 cents. Okay, 70 cents. That's supposed to be 7. Okay? So 70 cents. Okay. So 70 cents. So that allows us to shorten the loss. Okay? Let's erase. Okay? So does that make sense to everybody? 70 cents. Okay? Okay. All right. So we'll continue. So time, price, and the deal, right? Having the right terms is vital. Okay, so expiration is the theta. Remember, time decay. That's where we make money, right? As time passes by, it becomes less and less valuable, the option that we sold to them. Sorry, that they paid us for. The delta is the strike price, right? How quickly it moves, and really we're going to use that as a probability state. And then we have the deal. We remember when we talked about this, you can see that the expiration, that's why we sell that option is, and we sell it in this area, the cash flow zone, because it deteriorates quickly in the last 30 days, faster than any other month, okay? That's why we want to sell 30 days, roughly 30 days out, okay? 1.6%, that's what it's losing each day, okay? And over that 30 days, it becomes worthless, okay? So we talked about this a little bit about, you know, what rules we're going to apply. There's rules associated with it. So we want to sell the call option with the expiration date closest to 30 days till expiration. So 30 days out, closest to 30 days. So we have 24, 31, 28 days. We're going to get the one closest to 30. Hence 31 is the one we're going to choose. Okay, 31. Okay. Then we have the delta, right? What delta should we sell? Okay, so now we know we want 31 days out, but what delta should we sell? Well, the delta is going to be closest to 40, which we talked about this. That relatively means probability. So they have a 40% chance of being profitable. We have a 60% chance of being profitable, okay? So we're looking for the closest to 40 delta. We see 45, 37, and 30. 37 is the closest to 40. That's why we choose that one. Okay, and that'll tell us what strike price to sell to them. Okay, that'll tell us exactly what strike price based on these rules. Okay, this is just a list of potentials, but don't worry about that. The most important thing is closest to 30 days and closest to 40 delta. Those are the two rules we're going to apply. Okay, when it comes to selecting, when we decide the stock, we select those options that meet that criteria. Okay, so closest to 30 days out and a 40 delta. That's what we're looking for. Okay. So any questions so far? Everybody's clear on that? Makes sense? Okay. So, oh wait, let me bring up. Give me one sec. Okay, so actually, why don't I do this? Why don't I bring up? I'm gonna bring up. Interactive Brokers, and we're gonna try one out. Okay. So what rules do we have? We have 40 delta. We have 30 days. 30 days. Okay. Now that leaves the stock. What stock do we select in a covered call? Well, we like a stock that's going sideways to up. Sideways to up. Okay, you should write that down. Sideways to up, 40 delta, 30 days out. Those are the three things we're looking for. Okay, that's what we're looking for. So when we're looking at stocks for an opportunity, we're looking for stocks that are, you know, in a sideways to up pattern to select, and then we apply the rules when we're looking at the options for it. Now, right now, stock market. Can everybody hear me okay? Can everybody hear me okay? Yeah, okay. Just lost you for a second. Okay. So when we're looking at the stock, I told you one of the things that I look for is first identify if we're in a bull or bear market. I would still consider us in a bull market with what's going on in the stock market. So there should be a lot of opportunities for a cover call setup. Okay, should be a lot of opportunities for a cover call setup. Now, that being said, there's a lot of volatility, so we have to keep that in mind. A lot of volatility as this comes up. What we can do is we can select some stocks, and we'll walk through what it looks like when we go through the process of putting on a covered call for that particular stock. Okay. All right. So let's go back over here. Okay. All right. So we have the platform open. We're gonna look at some opportunities. So we need option trader open. Okay, for the options. Okay. We'll leave that alone for a second. Okay. First thing I want to do is I want to look for opportunities. So I want to look at a chart. Okay. So why don't you give me a stock to look at, and we'll first we need to see a stock that's moving sideways to up. Okay. So go ahead and give me a stock you'd like to look at. Symbol if you got it. Anybody? Nobody has a stock they want to look at? Here, Canada, what's the symbol again? AC, okay. AC, we're gonna use Air Canada, we're gonna use the one, we can use the TSC, that's fine. Okay, let's see what it looks like. Okay. So, remember, we're looking for a stock that's up to sideways, okay? Up to sideways. Sideways to up actually is better. So this actually is a nice sideways to up, right? If we wanted to look at, you know, the range, it's kind of in this range. So this is pretty good setup for a covered call. So we look at it and we say, okay, is this sideways up? Yep, it looks like it's in a sideways range. It's not quite in an uptrend, but it's still good, and we really like the fact that range. So you see that it goes up, down, up, down, up, down to the lower end of the range, and we'd like it to stay in this range or even go up would be fine for us. Okay, does everybody see that? So sideways to up, this looks good to us. Okay, this looks good. Okay, so now we see, okay, AC, we're gonna use AC on this. Okay, we're gonna go to the option trader. Okay, which is right there. Okay, and we're going to select AC. Air Canada. Yep. Okay, and we're going to see the options for it. Hope it shows the ones for Canada. Okay, beautiful. Okay, so remember, what's the first rule? What's the first rule? Never lose money. I wish that was possible. What's the first rule for the cover call? What am I looking for? What's the first thing I'm looking for? Closest to 40 and 30 days. So 30 days actually is the first thing I'm looking for. So I'm looking closest to 30 days. Now that's pretty dark. Can't really see it. But we're looking for 30 days out, right? We're looking for 30 days out. And if we look here, let's go, let's do August. Let's go all the way to, just to make a point here. Okay. There you go. There's one right there, 30 days out. Everybody see July, 30 days out. That's perfect. All right? Everybody see that? So everybody can see that, 30 days out. We have 30 days out. The next thing we're going to look at is the delta of 40, okay? So here's the call side, and here's the put side. We're doing the call side, okay? So the calls, we come down to 40, delta closest to 40, And we see, okay, there's one that's 47, 140.9, or 49, 40, and 9, 409, and 34.2. So the closest one is this one. Closest to 40 is this one. Everybody see that? Closest one is to 40 is this one, okay? So you see, I look at the delta before I look at the strike or the price of what the cost is. I'm looking for the delta of 40, okay? So now I see the delta of 40. What option is that? Well, if I look over here, it's the 21s, okay? So if I sell the 21 calls, that's the 40 delta, what will I get in premium? Well, the premium is somewhere between, well, here's the ask, the bid, the ask, right? So 144. I'm going to get about $1.44, okay? I'm going to get about $1.44 for the option, okay? Probably somewhere a little bit lower than that, but 144 is the ask. We'll assume it's 144 for now, okay? So I get $1.44. Everybody with me so far? So I get $1.44. I sell the 21s. Now remember, when I looked at the stock, right? Where was the stock? The stock was, fits the pattern beautifully. The stock was trading at what? The stock is trading at, last was $18.75. The last one's at $18.25, okay? So the next thing I got to do is I got to say, okay, if I buy 100 shares at $18.75, $18.75, okay, and I sell the option at 144, the call, which is at what price? 21. What is the return on investment? Okay, what is the return on investment? So if I go back here, we're going to go back here for a second, okay, and I say, okay, so we have, okay, so we have AC is the stock. AC is the stock. What's it trading at? $18.75. Okay. Okay. And if I sell the call option, what are they going to give me? $1.44. Okay. $1.44. What is the ROI on this for 1 month? What is the ROI? Who can tell me? What's the ROI? Everybody remember how to calculate that? The stock's trading at $8.75 and I get $1.44. Everybody agree with that? So I take $1.44 and I divide it by 18.75. What does that give me? It gives me, yeah, exactly, almost 7.7 actually, 7.7. So 7.7%. Is that good for 1 month? Is that a good return? That's excellent. It's excellent. If I multiply that by 12 months, that's a pretty big number. Okay? It's a pretty big number. Okay? So the rule for ROI says I need 2% or better. 2% or better. Am I getting better than 2%? Yes. So this would be a trade that we could put on. Okay? So I go and I go back and I say, okay, I like this trade. Let me put it on. Okay? So this is called strategy builder. It doesn't really matter. You know, basically it's going to show us how to, it's going to create a option where we buy 100 shares and we sell the call. Okay, so let's try this. Might be better visual in the other one. Hold on a second. Let's go. And let's go over here. Let's see if I can change this view. Okay, I don't see the cover call in here. I want the other format so you guys can see it. It's easier to see. Let's do this. Okay, let's do one gives us a better look. No. There's another way to look at it so you guys can see it. I want you guys to actually see the you know what, let me see if I can do it this way. I want you to see what it looks like when you do it. See if that does it. No, it doesn't do it. Okay, let's see. We'll try to build it anyways, this way. I just wanted you to see the way it looks visually. It's just there's another visual that you can look that's a lot easier to for you to be able to. Let's go to 30 days out. 30 days out. 40 delta. Back to the delta. 40 right there. Okay. I want to sell right there. So the 135 is the sell. So I sell that. Okay. So you can see here, sell 1 July, 21 strike, call. Delta is 40.8. Theta is 0.037. That's the deterioration rate. Then the ask is 35, 144. So we would probably be one in between, say 140. This is one contract, okay? So we're gonna add stock to this. So give me 1 second. First, we're gonna take the mid price, okay? So the mid, we're gonna get somewhere in between these two in the price, okay? Somewhere in between is what we're looking for. Let me see something. Hold on. I want to add quantity 1 limit price. Okay. Let's see. Yeah, I want all of the stock leg. Added shares. Okay. So I've added 100 shares. Okay. So I've added 100 shares. Everybody see that? Can you guys see that? Is that a little small? I can't see it either. Let me see how I can make this bigger. I want to make this bigger. I think there's a way. Hold on. Let's do. I think it's function plus. How am I going to make that bigger for you? There must be a way to zoom your screen. Anybody know how to do that? I can't remember. Something. Oh, there we go. Ah, there we go. Everybody see that? Oh, hold on. Too big. All right, hold on. What did I do here? Minus. There we go. Let's do plus again. Let's see what it gives us. Hold on. Let's see if I can do this. Magnify. Okay, so we're going to magnify plus. Okay, it's a little bit big. Let's see if I can. Okay, there we go. Awesome. All right, everybody see that now? Everybody see that okay now? No? You can't see it? Oh, it's not showing it to you. What do you see on your screen? I don't know what you see. We still have 1875 example, 18 AC. Yeah, what do you see on your screen? I don't know what you're seeing right now, so I can't tell. Let me try something else here. Okay. See what that does. see if I can do that again. Hold on. Can you see it now? Oh, hold on. You can't see anything right now. Okay. There we go. Hold on 1 second. Okay. Hold on 1 second, okay? All right. Okay. Let's try this again. Okay. Okay. You can see now, yes? Okay. Let's try to, I'm going to try this again, okay? I'm going to try to enlarge it. Hold on. Can you see it? Is it big? Yes? Okay. I want to move it. Okay. Let's try it right there. Okay. Can you see that now? Cell 1 contract July 17th, 2000. Strike price is 20. It's a call. The delta's a 40. Theta's 0.037. The bid and the ask is 35 to 144, 135 to 144. So we're going to get somewhere in between there, okay? The size, that's just what's on the offer. Don't worry about that, okay? And over here we see buy 100 shares of stock of AC, okay? Price is between 875 and 1880. Everybody see that? Make sense? Okay. So if I execute this, it's telling me that the price is between 1731 and 1745. That's what I'm going to pay, somewhere in between that, okay? Somewhere in between that, okay? 1731, 1745. Now you might ask yourself, where did they come up with this price? Okay? The reason they came up with this price is, you remember, if I buy the stock at say 1875 and I sell the option, it's at 135 is going to come off of this 1875. Does that make sense? That's why they're saying it's going to cost 1731. Everybody see that? Okay. Let's do this. There we go. All right. I got lost a bit. We are buying or are we selling? Well, you're buying the combination of that. So let me explain. Okay. Hold on. Okay. I'll do this nice and slow. Don't worry. We're going to repeat this process, so don't worry too much about it. But if you have questions, obviously, I can explain it to you. Okay. So AC, right, is trading, say we get AC at $18.75, okay? That's what we're going to pay per share, okay? So if I buy it for $18.75 and I sell a call at, say, $135, okay? I sell a call at $135, right? What I'm going to pay is $18.75 minus $135. Does that make sense? Because I sold and brought in $135, and I bought, and that cost me $18.75. Does that make sense to everybody? So if we minus this from that, what do we get? We get 17 what? Exactly, 1740. So I'm buying for 1740 this above here, okay? That's why it's saying 1740. Does that make sense? Okay? That's why it says 1740. So when you're in this position, you're going to see a call at 135 that you sold. It's going to go down in value over time, right? So time is going to make this go down in value. So let's say 2 weeks go by and this is worth 75 cents, okay? All right, and let's say my stock, right, I bought it for 18.75 and it hasn't moved. It hasn't moved, right? So if we're buying a call, delta should be close to 60, right? That's if you're buying a call, but we're not buying the call, right? We're not buying the call on the stock. We're buying the stock and selling the call, okay? Does that make sense? Okay, good. So if the call in 2 weeks goes down to 75 cents, right? Because it's lost value over time, right? That's what we sold them, right? That's what we sold them. What's my P&L gonna look like? My profit and loss. I'm gonna look like I'm plus. I made how much? I made how much? How much did I make? It was 135 and now it's 75. How much did I make? Remember, I sold it for 135. Now it's only worth 75 cents. I sold that to somebody. If I wanted to buy it back, it only cost me 75 cents. But I sold it to, say, Henry, I sold it to you for 135. It's only worth 75 cents now. So how much have I made? How much have I made? The stock's exactly the same place, $18.75. Does everybody see that? Does everybody see that? Right? I made 60 cents. So my P&L shows plus 60 cents. Right? Now remember, this is 100 shares, so yeah, it'd be $60 for 60 cents. So do you remember, if we go back here, what did we pay? $17.40, yes? So $17.40 is what we pay. So what it would look like, right, is it would look like I bought it for $17.40 and now it's worth how much? How much is it worth now? I bought it for $17.40. How much is it worth now? Not $18.75. That's the stock, right? The stock's worth $18.75, and now the option's only worth 60 cents. Sorry, 75 cents. So exactly $18. So $18. That's what it's going to look like. So my position was what? It was $17.40. I bought at $17.40. Now it's up 60 cents, so it's worth 18. Does everybody see that? That's what you're going to see when you're looking at your P&L. Does that make sense? Makes sense, right? Okay. Now it's worth $18. Okay. Now if we go all the way to the end of the month, and the call option is worth how much at the end of the month? How much is the call option worth? How much is the call option worth? If the month goes by and the stock still stays at $18.75, so it hasn't moved. It's gone up and down, but it ended at $18.75. What's the call option going to be worth? Not the 18. You're looking at the whole amount. I just want you to tell me, what's the call worth at the end of the month? The call that I sold at the end of the month is worth how much? Do you remember the call we sold? We sold a call with a strike at $21. Okay? The stock's still at $18.75. So what is the call worth at the end of the month? Not 21. No. Remember, if I sell you, Henry, if I sell you a call that you get to exercise at $21, right? and you paid me $1.35, and the month is passed. It's at the end of the month now. The month is passed, and it's worth the stock's at 18.75. What's the option that you hold, Henry? What's it worth right now? What happens to an option at the end of the month? What's it worth? If you can't exercise it, what's it worth? If it never hits $21, what's it worth? It's worth 0. Does everybody see that? No, it's worth 0. Remember, you only get 30 days, right? The guy only gets 30 days. So if I sold it to Henry, Henry's got 30 days to cash in that option. Well, he bought the 21s strike. So if he can't, if the stock never hits 21, there's no use for him to use it, right? Because he's only allowed, do you remember what the call option gives him the right to do? It gives him the right to buy the stock at $21. Well, if the stock's trading at $18.75, why would he want the stock at $21, right? He can go buy it for $18.75. So the option he bought from me is worthless. It's worth 0. Everybody see that? Does that make sense? The option is worth nothing now. So remember now, our P&L is going to show what? It's going to say up. How much? So how much did you lose? You didn't lose anything, Rodrigo. If you're the one who sold the covered call, you didn't lose anything. You made money. Yeah, $1.35. So we're up $1.35 because the option we sold is worthless now. So what's it going to show? Our position. Remember our position? Remember our position? Our position was 1740, right? 2 weeks in, because the stock stayed the same price and the option became less valuable, was 18. At the end of the month, what's it gonna say? It's gonna say $18.75. Everybody see that? Because now we just have the stock, right? We just have the stock. So the position is going to say 18.75. We have 100 shares at 18, our share price is 18.75. So we made $135. Does that make sense to everybody? So to look at it another way, look, this might look more familiar. AC at 18.75. What'd the stock do? Nothing. So what did we make? We made the option, $135. That's what we made, $135. Everybody see that? So if the stock stays exactly the same at the end of the month, it's $1.35. That's what we made. Okay, does that make sense to everybody? Okay. What if the stock goes up to 21? Goes up to $21. What happens then? If the stock goes up to $21, what happens? If it goes past $21, what can the person who we sold the option do? Let's say it goes to $24, right? So what do we make? We make $1.35 plus $21 minus 18. That's times 100. Well, yeah, you don't have to do the times 100 because you're right. It's times 100, but you're absolutely right. That's exactly right, Henry. So we'd make an additional how much? $1.25 plus $1.35. How much is that? $2.60. Everybody see that? We make $2.60. That's right, Henry. You got it exactly right. We make $135 plus another $1.25. That's exactly right. So we make $2.60. Everybody see that? $2.25 plus $1.35. That's right. Everybody see that? Because they take the stock away from us, but they'd have to pay us $21. Well, we bought it for $18.75. So we made $2.60, right? So here we made $1.35. We know that's 7.7%. But up here, If we actually, they take the stock away, how much do we make for return? In 1 month, how much do we make? Well, I take $2.60 and I divide it by $18.75. That's what I put up. So what's my return? What's my return? 13.9% return in 1 month. Everybody see that? So if it actually goes up, that's better for us. Let them take it. What happens again when it's up to 24 is our profit becomes 135. Yeah, that's right. That's right. That's exactly right. If it goes over $21, they're going to take the stock away, right? Let them take it away. That's better for us. They take it away. We make $1.35 for the option, $1.25 for the stock. We make $2.60. We made 13.9, almost 14% in 1 month. In 1 month. Okay? 1 month. That's pretty good. If the stock goes down, okay, say it goes down to $17. Okay? $17. Well, we clearly lost some money, yes? How much did we lose? We lost $1.75 on the stock, right? But remember, we lost $1.75, but how much did we bring in? 135 from the option. Sorry, I lost you there for a second. What's our net loss for the month? That's right, 40 cents. 40 cents. We lost 40 cents. Okay? Instead of losing $1.75, we've only lost 40 cents. So what do we do if that happens? What do we do after that? What do we do after that? So the month has passed, we've lost 40 cents. What do? We do it again. Exactly right. We do it again. And again, and again, and again, and again. Can we limit this? Can we limit the losses? In this particular scenario, the way you're going to limit losses is you can exit out of the position earlier. You can exit out of the position earlier. I don't want to get into more complex and adding legs to this, but trade management wise at this point, you would just say, once it gets to $17, I want out. I want to be out of the position. Right? I want to be out of the position. But you could just put a stop loss on the whole thing. You could put a stop loss that says when that triggers when the stock hits $70, just close the position. Just close the position. But remember, covered calls are really designed for the idea of holding stock and selling options on it month after month after month. But you don't have to hold the stock more than a month. You can do this with a stock for 1 month or 3 months or 10 months or 60 months, 5 years. So likely buy the call to cover it. Well, if you sold the call to close it, you have to buy it. And if you bought the stock, you have to sell it to close that position, right? So you have to close both sides of it. But you can close it all together. You can close it all together. You don't have to close one and one. You can close it all together. Okay? Does that make sense to everybody? Yeah. So if you did the cover call on this, and you only made the premium, only made the 135 a month, how many months would it take for you to get your money back to 1875? How many? If I'm taking $1.35 a month, I'm not saying you're going to get that, but I'm just saying as an example, 135 a month. If I'm making 7.7% per month, what would I make in a year? How much would I make in a year? Think about that. Not 77. That's 10 months. Times 12. How much would I make? 7.7 times 12 is how much? 92.4%. So in 12 months, I make 92.4%. Is that a good return? Absolutely. So I always want you to do this. I want you to cut your returns in half. Lost you again for a second there. If I cut that in half, what am I looking at? 46.2%. Is that okay? If I only get half of that. Okay. Welcome to covered calls. This is covered calls. Who likes covered calls? Yeah. If you can make, even on your covered calls, 12%, say to 24%, you're a champ. You're doing great. Remember, we're looking for 2% a month. We're looking for 2% minimum a month. So if we run this scenario with Air Canada, and we found out it only paid us 1.5% for the month, we wouldn't do it. It's got to pay us at least 2%. Right now, the market's very volatile, so the option prices have increased. So it's a good time to do such a strategy in the way of getting the highest price for that premium. Okay. Now again, I'm reminding everybody, I don't want anybody here to use real money. I want you to test it out, see how it works, and then learn from your mistakes, making sure you're putting it in right, make sure that you execute right, and make sure you experience all the things, it going up, down, and staying sideways, so you have an understanding of it. Sam, is the delta and the theta you have in Interactive Brokers is live? Is it to date? Yeah. Is it live data? That's the most. Yeah. Well, the market's closed, so those numbers aren't going to move. Yeah. So it's delayed data because it's a simulated account, but that's relatively accurate. I don't see it with my Questrade. Maybe because I don't have the data package. Even if you didn't have the data package, you should still be able to see Questrade. You might not have you might not have the ability to do it because you don't have the right level to allow you to trade options. That might be the case, Henry. I doubt it though. If it's a simulated account, it lets you do anything. Typically lets you do anything. Do we have to buy a minimum of 100 shares? Yes, you have to buy 100 shares. It has to be 100 shares. For now, at least. So you got to buy 100 shares at a time to do the option, to do covered calls. I have it and got my AC hit for cover call, but wasn't able to see data. I'll search this further. Okay, all right. Any questions about any of this so far? Okay, we only have 10 minutes left, but you want to try another one? You want to look at another one? Okay, so give me a stock. Give me a stock you want to look at. So let's look at the stock first. Yeah, you can use an ETF as long as there's options. Typically, everything's got options now. So let's look at what ETF you want to look at. The let me see. That's a few times the connection keep broke again. I don't know why, but okay. Let's look at VFB. That's the first one I got. I believe. So let's look at the screen. Okay, so VFV, first thing we're going to look at is the chart. Okay, so that's the chart for VFV. Okay, so we can see VFV is actually, it's an uptrend here for sure. Okay, but it's starting to go sideways. Okay, like this. I'd rather see it go sideways to up, but this is fine. This is, you could still do it with something like this. You could still do it with something like this. Okay, it's bull market, so there's lots of opportunity. Okay, sure, I'd like to see it lower range than the upper range, but let's just look at it so far as we want to do a cover call on this. So it's going up to sideways. Okay, so we look at it, we say, okay, this looks like I want to do a cover call on it. Let's go to the option chain. So I go to the option chain, right? Let's look at, see what we got here. VFV, right? VFV. Yep. Okay. Let's look at the options for it. Okay. Remember, first thing we want to do is 30 days. Okay, out, at least closest to. We have one that's 30 days right there. Okay. So I look at that and I say, okay, I'm looking for the delta that's closest to 40. Which delta is closest to 40? Okay. Which one? We got 47.5 and 34.8. Okay. Which one's closest to? This one is right here. It's closest to 40, right? Okay. So I look over here and I see the strike is 78. Okay. So the strike is 78. That's the one I'm going to sell. It's $78. That's the call. Okay. And then we got the bid and the offer. It's pretty wide. Pretty wide. So don't like that too much before the bid and the offer. So there's not as much liquidity and options traded on this. I'm not saying it can't be done. There's not much here in the way of, action on this particular stock. Okay, the CTF. Does everybody see that? The fact that this is very wide, there's 85 to 155 is very wide, tells me there's not a lot of action on this. Okay? But if we wanted to do it, right, if we wanted to, do this, we would sell the 78, right, for 85 cents, say. We'll get the lower end of it. And I'm going to add shares to it. So I'm going to, where did I do that again for this one? Sell, okay. What did I do? Advanced right there. Okay. So advanced, I'm going to add stocks, 100 shares. Okay. So if we look at that, we see that I bought 100 shares of it for $75.01, and I sold the option for 85 cents, and I'm going to be listed as $73.46. Just look at this side of it for now, okay? Now, ask yourself this, well, you don't have to ask, do the math. What's 85 cents on $75 investment? What's your return on investment? If you make 85 cents on $75, what's your return on investment? What's the actual return? So I take 85 cents and I divide it by 70, what was it, $75. My return is how much? 1.1%. Does this qualify? No, it doesn't qualify. No, right? It doesn't qualify. So that's fine, no problem. I'll just go to my next stock, right? This is what I'm saying. Once you run the system, you follow the rules protect you to make sure that you're in the best possible position. So if I go over here and I say, okay, well, I'm not going to use this one. Let's try, say, Walmart. Okay, so Walmart. So let's try Walmart. Okay, so look at Walmart. Is Walmart sideways? It's kind of going in a downward motion, right? Okay, it's kind of going downward. So I would say this sideways to downward disqualifies this for a cover call. Everybody see that? Everybody agree with that? Makes sense, right? Down, sideways to downward. I could still put it. I could still do a trade on this. I just wouldn't do a covered call. I'd actually do the reverse, but we'll leave it for now. Okay. Okay. Let's look at another one. Give me another one you want to look at. So you once you start to once you know the rules, you can just go through it real quick. Okay. KO. Coca-Cola. There we go. Never traded Coke. All right. Okay. Well, Coke's okay. Sideways. You know, it's blue chip. You know, it's a sideways pattern. I'd say okay. It's at the lower end of the range. Not bad. Okay. Let's look at Coke. So then I go to my option chain, and I go KO. Right. Put KO in here. Coca-Cola. Good. I look at the chain for 30 days. I'm going to just add more here. So 3 days out, I look at, that's some days, I went too far. Here. There, 30 days. Must be this one. Days out. Sorry, broke connection again. So 40 point, I gotta let you see. Hold on. I don't know why it's breaking connection so many times tonight. That's weird. Okay, so you can see my screen, yes? So we look at the 40 delta. There's a 40.6 right there, delta. That's the closest one to 40. The strike price is 47.5. And we got the bid and the offer. That's a lot tighter. You see 112 to 117. That's good, okay? So if I sell this option and I buy 100 shares of stock, okay? It's saying I get $1. Basically, just use the bottom end just to keep it safe. If I sell for $1.12, what's my return on investment? If I sell for $1.12 and I buy the stock for $46.34, what's my return on investment? 112 divided by my investment of $46.34. What's my return? 2.5. Does this qualify? Rodrigo, does this qualify? Yes, it does. Yeah, it qualifies. It qualifies. So I hit submit. Oops, sorry. Take this out. So I would actually submit this order. Oh, give me one sec. Let's see, 40 to 45, 40. Let's go. 45. Probably be 45, 43. Hold on. So let's just put the offer at 45.40, just where it is, okay? So I hit submit. Okay. So we see that we have sell 1 Coca-Cola, July 17th, 47.5 call. We buy the stock for 45. I'm sorry, we buy the stock for 45. 46.34 is what we bought the stock for. So the total order comes out to 45.40. Everybody see that? So they took the stock price minus the option, so it's 45.40. Okay, 45.40. Okay, so I submit. Okay, and now I have that order. Okay, if it didn't refuse it, I don't know if it refused, to tell you the truth. I just punched it right through. Okay, so if I go back here, there it is. See the order? There's the order right there. Okay, everybody see it? So buy, it's good for 1 day. It's a limit order. which means I'm not going to pay more than $45.40 for it, and it's submitted. So tomorrow, if I can get this at $45.40, it'll trigger the order. If it's above $45.40, it won't trigger the order. Okay, but if it's below, if I get a better price, it'll submit the order. Does that make sense? I won't pay more than $45.40. I can pay less than $45.40, but I won't pay more. Does that make sense to everybody? Okay. Don't worry, we're going to go over this again next week, okay? We'll do more of this next week. It'll make more sense. All right. I'm going to wrap it up. Any questions before we call it a day? Okay, this is a recorded video, so I'll post this video up in the next couple of days. You can review it again, and then we'll just go through this all again next week. My pleasure. My pleasure. All right, folks, have a great week. If you have any questions in between, you know how to reach me. Otherwise, I'll see you all next Wednesday, okay? Review the video. I'll post it up in the next couple of days. Have a good night.